Do you ever feel like your finances are out of control? Does it seem impossible to save anything by the end of the month? What if budgeting wasn't as complicated as it sounds? Well, in this video, we will be going over some budgeting basics that can set you on the path towards mastering your personal finances. Learning how to budget effectively is one of the fundamental building blocks of financial success. Yes, you heard that right. When we properly budget our hard-earned money, it empowers us to take control of our finances rather than having our money control us. Implementing a budget brings clarity to our financial situation by laying everything out: how much we earn, how much we spend, and what we can do to reach our financial goals. So what exactly is a budget? A budget is simply a plan for our income and expenses over a set period of time, usually monthly. It allows us to allocate our income towards necessary expenses, savings goals, debt payments, and discretionary spending. Budgeting gives us awareness of where our money is going each month. Without a budget, it's easy to wonder where all of our paycheck went. By budgeting, every dollar is accounted for on paper before we ever spend it. When we stick to our budget, we end up proactively making intentional spending decisions rather than reactively trying to deal with being short on money at the end of the month. Some key benefits that come with budgeting include increased savings. Budgeting helps identify areas where we can cut back on spending and reallocate those funds towards building emergency savings, retirement accounts, college funds, or other financial goals. Reduced debt. By sticking to a budget that accounts for debt payments, we can become motivated to pay off debts faster and reduce the amount of money wasted on interest payments. Financial peace of mind. Budgeting allows us to take control of our money instead of having our money control us. There is comfort in knowing exactly where your finances stand each month. When it comes to the actual budgeting process, there are a few different methods and systems to choose from. The three most common budgeting methods include: with zero-based budgeting, the goal is to assign every single dollar of your income a purpose towards budget categories like bills, expenses, debts, and savings goals. At the end of budgeting each pay period, your income minus expenses should equal zero, leaving no dollar unaccounted for. The zero-sums approach requires us to reevaluate our entire budget from scratch each month, avoiding just carrying budget surpluses over month to month. This allows our budget to ebb and flow with life's changing circumstances. A simpler budgeting approach is what is known as the 50-30-20 rule. With this method, we break out our monthly net income into three spending categories. 50% needs. This includes all absolute essential expenses like housing, utilities, transportation, minimum debt payments, groceries, insurance, etc. 30% wants. Fun money for hobbies, dining out, entertainment, travel, and other discretionary spending that brings us joy. 20% savings and debt repayment. This critical category allows us to build our savings, invest for the future, and accelerate debt repayment. The power of the 50-30-20 system lies in its simplicity. By separating needs versus wants, it helps put limits on discretionary spending, ensuring we live below our means. Envelope budgeting is another simple, hands-on approach. With this cash-based system, we allocated money to physical envelopes earmarked for certain spending categories like groceries and dining out, etc. The idea is that when an envelope is empty for that month, no more spending is allowed in that category. Using tangible envelopes makes visually clear when a spending category has been maxed out. Saving your budgeted cash also avoids overspending the way many do with credit and debit cards. The envelope method trains our brain to think carefully about each expense decision during the month. It provides the accountability and awareness needed to stick to our budget. Whichever budgeting method most appeals to you, there are some universal tips that can set you up for success. The first step in designing any budget is having clarity about how much money is coming and going out each month. Tracking income and expenses may sound tedious, but it lays the groundwork for building a realistic, personalized budget. There are some simple ways to do this tracking. Log into bank accounts and credit cards and view recent monthly statements to tally up common expense categories. Use a spreadsheet or budgeting app to manually input your income deposits and expense withdrawals for the month. Make use of your bank's transaction categorization features if available. As we track monthly spending, it becomes clear that certain expenses tend to be fixed versus variable each month. Fixed expenses remain consistent month to month. This includes bills like rent or mortgage, car payments, insurance, gym memberships, Netflix or Amazon subscriptions, etc. Variable expenses fluctuate month to month based on our behavior. Examples include groceries, dining out, entertainment, clothing, etc. Identifying the fixed versus variable expenses in our spending history allows us to separate essential costs from discretionary costs as we budget. Set realistic financial goals. With an overview of our income and spending tendencies, we can start to set some realistic short and long-term financial goals to help guide our budgeting. These goals should align with our personal values and priorities. Common financial goals might include building an emergency fund, saving for a down payment, paying off loans, maxing out retirement contributions, saving for college, or booking a dream vacation. All of these targets represent priorities we likely have for our money. Whether we hope to strengthen our financial foundation through emergency savings, make progress towards major purchases by saving up over time, accelerate debt payoff so money isn't wasted on interest, ensure our future through retirement investing, or enrich the present through experiences, articulating these goals reinforces why budgeting matters. Building even longer-term milestones into our written budget holds us accountable for aligning our everyday spending with what matters most. Even small progress towards realizing our biggest financial goals creates motivation to stick to our budget. Emergency fund allocation. One critical savings goal that every budget must include is an emergency fund. This involves allocating money each month towards building a stash of 3 to 6 months' worth of living expenses. Having this emergency buffer prevents getting into further debt to cover unexpected costs like medical bills, car repairs, job loss. Knowing this safety net exists allows us to invest more aggressively for the future as well. While the upfront planning that goes into designing a budget is essential, regularly reviewing and adjusting based on real-world conditions is what makes a budget actually work. We should revisit our written budget at least every 1 to 2 months to identify areas where we over or underspend. For example, maybe we discover that the grocery budget needs increasing based on food inflation. Or perhaps we aren't actually spending our budgeted entertainment amount each month, allowing us to reallocate some of that money towards speeding up debt payments. The budget needs to remain a living, breathing document that evolves as our financial situation does. This ensures we can course correct when needed rather than giving up entirely. While budgeting can certainly be done with a simple spreadsheet or paper and pencil, there are now many helpful budgeting apps and tools available to streamline the process. Top budgeting apps like Mint, YNAB, and EveryDollar can instantly connect to financial accounts to automatically import and categorize transactions. They provide customizable monthly spending reports to identify problem areas. Apps make budget tracking and decision-making much simpler. Beyond these apps, your bank likely provides additional budgeting features as well. For example, many banks allow users to set monthly spending alerts when certain budget thresholds have been reached. Some also offer the ability to set automated transfers to designated savings accounts. Investigating what budgeting technology your financial institutions provide can remove friction from managing your budget over time. Budgeting well takes some effort upfront as we implement new systems for money management, but becoming a budgeting master allows us to thrive financially for the long haul. We never regret having a solid understanding of our money situation each month. Hopefully, this Budgeting 101 overview provided you a starting point to build a realistic spending plan aligned with your financial values and goals. Turn budgeting from a chore into an empowering act towards securing your financial future. What budgeting commitment can you make today? Let us know in the comments.